Okay, good morning. Good morning. I'm going to take a look at a few of the markets from last week and also talk about next week um, and take a look at a few of the templates to see how they would have provided us with some good trade opportunities to get into the markets. Um, First, we've already looked at NASDAQ a couple of times, but I wanted to point out a few things because this goes into next week also. Um, Here is the daily, and let me take these, show you this fib zone here. This is why the price got caught, sandwiched like it did. Very interesting. This is taking it from the body of the candle to the previous high, and very, very telling. Finally, we're breaking out of our channel. So remember I said we want to break out of the channel and continue rising. And the COT report confirms this going into next week. It should be bullish. We had we have 232,293 open interest, and changes from the prior week. We have increased 10% long. So the traders had started to position themselves short in NASDAQ given this prior sell-off, but now 10% are flipping long, and this is the column you want to be in, the dealer intermediary, because this is where the big money, the banks are, and they're the ones that lead the trend. So they're flipping back long. 10% of 84,000 of the total position changed back long. Um, and we have Jerome Powell's first meeting with Congress um, Tuesday, um, which will confirm his bullishness in the markets again, and I think will cause that to continue moving forward. Now, please note that the leveraged funds, your hedge funds, managed money, are still short. But I think that's going to, so we have that dichotomy, between the smart money and the um, leveraged funds, and we will probably want to stay with that smart money. The hedge funds can be wrong all the time, but definitely we're going away from the channel. We're coming into this area of the sell-off right here. I think this is a key area day right here. That was a very compressed day. People were trying to, that was a battle day. So price then came back, tried to break through it, could not do it, and then turned around and sold off. So we're coming right back into that range. So if we extend this out, that's probably where we're going to get to, at least the bottom of that, and that 69.50 area-ish, 69.50-ish. So be paying attention to 69.50, and if you can break above the top of that, the open 69.77, so 27 points there. Very telling of this market. So that's your line in the sand. And Tuesday, like I said, he's going to be speaking. So be aware that it could possibly, definitely reach that, but it's probably going to go wonky once it gets there because there'll be some strong resistance from these sellers. and those probably are the institutional sellers. So just be careful of that range between 50 and 77. For crude, we are breaking above the channel also. And another thing that you have to realize is the backwardation is still in place. So it does not pay people to hold inventory and storage. So that is why the reports, the EIA reports, continue to show that negative inventory, which is positive and bullish for price. So as long as these are still remaining, the backwardation, you're going to see these bullish EIA reports out of Cushing because it does not pay them to store it. So I would continue long with that storyline. And again, if everything is bullish and Powell gives Congress the green light and all that CapEx spends continues to be implemented, you're going to see more higher energy prices. So I would stay long with the crude until it breaks below the channel. Um, it can come back. That 50 is sort of flattened. It can come back and test this area, and it probably will, 62 to 63. So it often will break out of the channel and then come back to the mid band and then continue on. Um, so you just don't want, here was a brief pop through the channel and they immediately took it back up. You just don't want it two closes below that channel because that signifies that downward move. So we don't want to see, or a big, big bear bar through the channel was very bearish, and especially on the 200 EMA. So right now it's bullish, and I would continue long crude at this time, considering that we're still in backwardation, which helps the market. And again, it helps those EIA reports. But as far as, intraday trading and picking the sweet spots, knowing when to get in and out of these markets, the market analyzer is very, very helpful the way I have it set up. I have trend on the right side, so I want to trade in the direction of weekly, daily, and when those two are together and go in that direction, and wait for the smaller time frame to catch up. So you can see the prices when they are trending weekly, daily, 60, 15. That's definitely when I want to go inside that market and trade that direction. The smaller time frames, the 5-minute and the over here, the super trend momentum, 15-minute, 3-minute, that's a combination of the super trend and momentum on this solver, will show me the pullbacks. So like in the NQ, you can see we have weekly, daily, 60, 15. We have this, but we had that end of the, here's that pullback. So you can see it was pulling back to its average. So this will tell you once it flips back green, and that's, you can see it on your chart or you can be watching it on your monitor. You don't want to be trying to go long when it's red. Obviously, you want to wait for it to turn around and close another candle. And I just wanted to point out, I like the 15-minute, 3-minute combination, and that's what I watch during the day. And I set the 3-minute on a high-low on my JATS high-low 1 template, and it's pretty good to help guide me on when to get back long after consolidation or as second entry for a trend continuation. The 3 minute though, you can sit there and wait a long, long time and miss a lot of the trades, and that's why we use the super trend. I mean the excuse me, the Unirinco. And there's nothing better or faster to allow you to fine tune your reentries with the Unirinco bar. So once you get a trending condition, you can just use your filters in either Raven or Blackbird to automatically take these trades in the direction that you want to go. So if you're only looking for longs and you've been watching your market analyzer and you see that it goes into red, you can set your Raven up for high, low, long, and it will get you in automatically, um, or your reversal long. I just, if I know that I'm going to go in a direction, I just set it in reversal long and then allow the software to get you in automatically. So that's your auto trading. And that would be once you've gotten an understanding that it's time to go back in the market, you certainly don't want to turn the auto trader on to go long when the market is not moving long. And that's the $64 million question. You know, sometimes we want to get in at a support resistance level, but the market is not there yet and is just going to bang you up on those smaller tick bars. Um, you know, you can lose a lot of money in a very short range by trying to get in too early. So it really takes discipline to wait for that higher time frame to be locked in and then take your lower time frame so that it's moving together. And once it starts moving together, um, you just leave it until your profit target gets set or your stop loss gets taken out, um, and not take your marbles off the table just because you get a reversal bar back to your moving average. That's one thing in a trend that you have to learn. Once it starts trending, you want to set either a trail and you want to just stay long during this trailing, but coming in and out of your bar changes in that direction. So that's something that the software will do for you and make it super simple. Once you get the market moving back in that direction. The MACD template has lots of solvers on it, combinations, and it's basically this on the chart. So that's why I call it MACD. It's the Market Analyzer Chart Template. And so I've taken these solvers from the Market Analyzer and I put it on the chart. I do not recommend that you trade it lower than a 15-minute for the MACD because you're looking for range expansions and things like that. And I have those really keyed up to a higher time frame. And so I have my own JATS super trend template here that, I have some customers that just love this template by itself, the JATS super trend. And now people are starting to move over to the mom, this super trend mom. I added another component to that, getting you in a little bit earlier. But or just trade a couple, find your other condition if you only want to take trades after it breaks past the prior day high, looking for that range expansion, or just you just want to go with higher time frame range when the higher time frame condition, and that is off of the market analyzer again right here, the weekly daily. So you can set whatever condition you want to be in place And then once that it's like a permissive. It's not like saying, enter on the 15-minute candle. I mean, it can be, but I'm just saying I prefer that you use it like as a permissive. So once the signal is in place, then go back to your smaller time frame and turn on the auto trader, whether it's the high-low 1 or the high-low 2. And start picking up those trades. And that will auto trade. This template I have set up with a Blackbird template for you, but you could use this in Raven, one trigger at a time. So say you just want to take trigger 2s in Raven, you can set this up to take trigger 2s. Now you're going to need, like in the NASDAQ market, a very wide stop. I wouldn't use anything less than 10 points as a stop in NASDAQ for an intraday level, or you'll just, constantly get stopped out. I mean, occasionally it will run without requiring a 10-point stop, but you really do need, at a minimum, 10 points. And so you would need a 10-point profit target. So make sure you have 10 points to run to the top as a profit target. So say this was 69.11, you would want this to be at a minimum of 69.01 to get in, just for the stop. So if we looked at 69.01, you can see right there it needed a little bit more than 10 points. So it's just running a little bit wider today with the volatility. And speaking of the volatility, I think it's going to be with us forever. Thank God. I mean, we're not going to find those tiny little compressed markets again like we had with Janet Yellen. I mean, she did a good job keeping the markets together and holding them up. But I think Powell is letting the reins loose. And I think that they'll be trading, holding the markets up when they need to send it back up. I mean, that was 100% central bank intervention right there. But I think they're just going to, and that's why the ranges are so great. People have realized we can start trading again. So you're going to get volatility up and down. But I think once he comes out and reassures Congress that he's going to be for this pro-growth platform and that the inflation is geared to capex and continued growth. I mean, this is just me imagining what I would do if I was the Fed chair. I mean, I have no idea what he's going to do or say Tuesday, but if I were the Fed chair, I would be saying, pro-growth, capex, it's the good kind of inflation that you want to have in the market to continue the growth. There's no reason why we can't have continued higher profit targets on your daily, and I'm looking for those higher profit targets. There's no reason for this to stop. So, and I think that's why you saw on the commitment of traders, the market, change. I mean, that's pretty significant. 10% of the smart money is now moved back long. So, anyway, so keep your eye on the 10-year yield, because I think the markets are, kind of correlating back to that spike. They're expecting a 3.25 10-year by the end of this year. So that could also keep stocks depressed a little bit, but it just all depends on what the central Fed chair will be telling us about his prognostications for interest rate increases based on inflation and what he, thinks of the economy. I can, myself, I just think it's fantastic. It's the first time in over 10 years that we've seen a spark of growth. So you can't dampen the market and send it down on your first spark of growth. That's just insane. So this has to at least reach your first profit target before they send it down, I would think. But anyway, what do I know? All right. Well, y'all have a great weekend. And again, wait for your signals. Um, don't try to time necessarily. I mean, if you do want to be a support resistance trader and you see price, getting below those channel lines, hitting a pivot point, you just want to enter there um, with a stop. I mean, you're risking like a huge amount. It could have gone back to that half back. That's why I wait, you know, as a meat trader. I want to be a meat trader, and that is taking the middle of the move, waiting for the move to happen, being patient, sitting on my hands, and because you can turn the auto trader on at the wrong time. I mean, it will give you signals, but they may not be the right time. So let's put this on inflections long to show you what I mean. It can, wipe you out. You can get in here and it sends it down here and gives you another long signal. So you could have, suffered a great loss there if you were running 5 contracts on that, trying to pop it up. So the best place to turn it on, seriously, is these low, buy low, sell high. I mean, this really is the best place to enter the market if you know that you're in a long, but you see how choppy this is. It doesn't always work. You're incurring a lot more risk, like right here, by doing that. It's much more risky to do this type of strategy because it can and does often roll over on you before it smooths out. And it's much better. That's why I use the super trend. Much better to just wait for your signal to occur. Stay out of the choppy part. Wait for the trend to happen, and you will recognize that because it's respecting your super trend and allow you to get in when it returns to your averages and get long and get a position going. So we all learn in the market, and we're all here to help each other make money and hopefully have a path to 7,200 at least on the NQ. So woohoo, back in business. We'll talk to you next week. Thank you so much.